All right, let's dive into this whole world of sustainable investing. I mean, it's gone way beyond just being a buzzword, right? Feels like everyone's talking about it. But what's it actually all about? And, should you care? We've got a ton of research and articles here. To break it all down, you could think of this as like your crash course on sustainable investing. But, no boring lectures.
I think what's really fascinating about sustainable investing is how it challenges that old idea that you have to choose between profits and purpose. Sustainable investing is really about proving that you can actually do well by doing good.
Yeah, I love that. Finally, our money can actually reflect what we believe in. So let's start with the basics. What is sustainable investing?
Well, at its core, sustainable investing means considering the impact of your investments, on the world, not just the potential for financial returns. It's really about integrating what we call ESG factors, environmental, social, and governance, into the decision-making process.
Okay, so ESG is a big deal here. Can you give us a quick rundown of what each of those letters actually means in the real world?
Absolutely. The E, environmental, encompasses everything from a company's carbon footprint and its efforts to combat climate change, to how it manages resources and protects biodiversity, for example. Is the company investing in renewable energy or taking steps to reduce its waste? These are the kinds of questions that investors look at.
Got it. So it's about their actual impact on the planet. What about the S for social?
So the S digs into a company's relationships with its employees, its suppliers, and the communities it operates in. So think fair labor practices,
right,
diversity and inclusion efforts, ethical sourcing of materials. Those are all key social factors. For example, a company with, poor labor practices might face boycotts or strikes, which could ultimately hurt its financial performance.
Yeah, makes total sense. So It's not just about being nice, it's also about managing risks.
Yeah.
That could affect the bottom line.
Okay, what about the G's, governance? That sounds kind of... Well, corporate Roy, it might sound like it's all about boardrooms, but good governance is essential for any company that wants to be sustainable in the long run. This factor looks at things like transparency in decision-making, executive compensation, board diversity, and whether a company has strong anti-corruption policies in place. A company with good governance is more likely to make responsible decisions that benefit all stakeholders, not just a select few.
Okay, I'm starting to see how these ESG factors all connect and how ignoring them could actually be pretty risky for investors. But isn't this whole idea of ethical investing kind of old news? Didn't the Quakers do this ages ago?
You're right on the money there. The roots of sustainable investing go way back, even to the 18th century, when the Quakers, a religious group known for their commitment to social justice, refused to invest in companies involved in the slave trade or the production of weapons. They were really some of the earliest pioneers of what we now call ethical investing.
So they were like OG sustainable investors.
Yeah.
But how did this idea evolve from there? Was it just like a small group of folks? For centuries. Well, for a long time, it definitely was a niche movement. But in the 20th century, we saw the rise of socially responsible investing, or SRI, which started to gain some traction. One of the early examples is the Pax World Fund, launched in 1971, which specifically excluded companies involved in the Vietnam War.
So it was still very much tied, though, to specific social causes at that point, but things have really exploded in the last couple decades, haven't they? What were some of the major turning points that brought sustainable investing into the mainstream?
Well, a major milestone was the launch of the UN's Principles for Responsible Investment, or PRI. Back in 2006, this initiative encouraged large institutional investors like pension funds and insurance companies to incorporate ESG factors into their decision-making. It was a real game changer in terms of bringing credibility and scale to the movement.
So it wasn't just about individuals making ethical choices anymore. It was about big money starting to take notice. That makes sense. And around that same time, we started to see dedicated ESG indexes popping up, right?
Yeah.
Like the MSCI ESG Leaders Indexes and the FTSE4Good Index series.
Exactly. These indexes provide benchmarks for investors who want to track the performance of companies. With strong ESG ratings, it's made it much easier to compare and contrast different companies and build portfolios focused on sustainability. And then, of course, the UN's 2030 Agenda for Sustainable Development, adopted in 2015, really put a global spotlight on the role of finance in achieving a more sustainable future.
It feels like all these different pieces, the historical context, the UN initiatives, the rise of ESG indexes, they all kind of fit together to create this perfect storm. That's pushing sustainable investing forward. But what's driving this massive shift in mindset? Why are so many people, especially younger generations, suddenly demanding that their investments align with their values?
That's a great question, and there's no single answer. It's a confluence of factors. For one, there's growing awareness and concern about environmental issues, especially climate change. People are realizing that our current economic model is unsustainable, and they want to be part of the solution, not the problem.
I feel that. It's like we're at a tipping point where we can't just ignore these issues anymore. And it's not just about saving the planet. It's about understanding that environmental risks can actually translate into financial risks.
Exactly. Investors are starting to realize that companies that ignore climate change, for example, are likely to face significant challenges down the road, from regulatory penalties to supply chain disruptions to reputational damage. So considering ESG factors is not just about doing good, it's also about making smart, forward-thinking investment decisions.
So Sharon's saying that sustainability is becoming a key indicator of a company's long-term viability.
Absolutely. It's no longer just a nice to have. Investors are increasingly seeing strong ESG performance as a sign of good management, resilience, and the ability to adapt to a changing world.
That's a really compelling argument. And what about the S and the G, the social and governance factors? What's driving the increased focus on those?
Well, I think there's a growing understanding that social responsibility is not just good for the world, it's also good for business. Consumers are increasingly demanding that companies act ethically and responsibly, and they're willing to vote with their wallets.
Yeah, I definitely pay more attention to a company's values now before I buy their products. And it sounds like investors are picking up on that trend too.
They are. Companies with strong social and governance practices tend to have happier employees, stronger customer loyalty, and fewer scandals or controversies. All of those things can ultimately translate into better financial performance.
So it's like a virtuous cycle.
Yeah.
Companies that do the right thing are more likely to attract customers and investors, which allows them to do even more good.
Exactly. And we can't forget about the role of government policies and regulations. Governments around the world are increasingly pushing for sustainability through initiatives like carbon taxes, renewable energy subsidies, and mandatory ESG reporting.
So it's a combination of consumer pressure, investor demand, and government action, all pushing companies to step up their sustainability game. It's pretty amazing to see how all these forces are aligning, but I have to ask the question. It's probably on everyone's mind right now. Does sustainable investing actually make money?
That's the million-dollar question, right? And I'm sure you want more than just a gut feeling. The exciting thing is there's a growing body of evidence suggesting that companies with strong ESG practices actually outperform their peers financially.
Hold on. For real. So it's not just about warm fuzzies. It's about potentially making a better return on your investment.
That's what the research is showing. There are multiple studies out there that have found a positive correlation between strong ESG performance and financial returns.
I've got to hear more about this. Let's dig into the data in part 2.
All right, so one study by Morgan Stanley looked at over 10,000 mutual funds over a 7-year period. And what they found was that sustainable funds posted equal or higher returns compared to traditional funds, while also exhibiting lower volatility.
Wow. So sustainable funds were actually less risky and potentially even more profitable. I'm starting to think I've been missing out.
And there's more. Another study by Deutsche Bank found that companies with high ESG ratings had a lower cost of capital, which means they could borrow money at lower interest rates, which is a huge advantage in the business world.
That makes total sense. If investors see a company as being well managed and responsible, they're more likely to trust them with their money, right? It's like getting a good credit score. But for companies...
Precisely. And it's not just about attracting investors. Companies with strong ESG practices often have better employee morale and productivity, lower insurance premiums, and a reduced risk of regulatory fines or legal challenges. All of those factors contribute to a healthier bottom line.
So this is blowing my mind a little. I always thought sustainable investing was all about sacrificing returns for doing good, but it sounds like it can actually enhance financial performance.
That's the old way of thinking. The world is changing, and investors are waking up to the fact that sustainability is not just a feel-good extra, it's a smart business strategy.
Yeah, I'm definitely starting to see the light, but let's be real. There must be some downsides to this whole sustainable investing thing, right? Can't all be sunshine and rainbows.
Of course there are challenges. One of the biggest ones is greenwashing, where companies make exaggerated or misleading claims about their sustainability efforts just to make themselves look good.
Oh, greenwashing. I remember reading an article about a fashion brand that claimed to be eco-conscious, but was still using sweatshop labor in their factories. So frustrating. So how can investors avoid falling for these greenwashing traps?
Well, it takes some digging. You can't just take a company's word for it. You need to look beyond the marketing and PR and really scrutinize their actual practices. Check if they have third-party certifications. Look at their track record on environmental and social issues. And read reports from independent organizations that assess ESG performance.
So it's about doing your homework and being a savvy investor. Even when it comes to sustainability, what are their challenges? Should investors be aware of in the sustainable investing landscape?
Another big one is data availability and measurement issues. There's still a lack of standardized ESG reporting, which makes it difficult to compare companies apples to apples. Different companies might use different metrics, which can make it hard to get a clear picture of their overall performance.
I see. So even if a company is transparent about their efforts, it might be hard to know how they stack up against their competitors. It sounds like we need more consistency and better data in this space.
Absolutely. There are ongoing efforts to develop universal standards for ESG reporting, but we're not quite there yet. It's a work in progress.
Well, it sounds like sustainable investing is a bit like the Wild West right now. Lots of opportunity, but also some potential pitfalls to watch out for. It's definitely not as simple as just throwing your money at any company that slaps a green label on their products.
You're right. It requires research, critical thinking, and a healthy dose of skepticism. But the potential rewards, both financial and societal, make it worth the effort.
I totally agree. Now, we've talked a lot about the general trends in sustainable investing, but it's a global movement, right?
Yeah.
Are there differences in how it's playing out in different parts of the world?
There are definitely regional variations. Europe has been a leader in sustainable investing for quite some time, with strong government regulations and a high level of investor awareness. They've really embraced the idea of integrating sustainability into their financial system.
I've heard that European countries are way ahead of the curve when it comes to things like renewable energy and environmental protection. What are some of the key differences between Europe and, say, North America when it comes to sustainable investing?
Well, for one, the European Union has implemented a Sustainable Finance Action Plan, which is a comprehensive set of regulations and initiatives aimed at making finance more sustainable. This includes things like mandatory ESG reporting for large companies, labels for green financial products, and even a taxonomy that defines what activities can be considered sustainable.
Wow. That's serious commitment, and it sounds like they're really putting their money where their mouth is. What about North America? How does the landscape compare?
North America is catching up, but it's still a bit behind Europe. In terms of regulation and investor demand, there's a lot of variation across different states and provinces, and there's no unified approach like the EU's action plan.
So it's a bit more fragmented.
Yeah.
But it sounds like things are moving in the right direction. And what about emerging markets? I mean, they face unique challenges, but also a huge opportunity to leapfrog ahead.
In terms of sustainability.
Right.
Exactly. Emerging markets have the potential to really drive innovation in sustainable investing. They're often on the front lines of climate change and other environmental and social challenges. So they have a strong incentive to find solutions.
This brings us to the future of sustainable investing. Where do we go from here? What are some of the trends and innovations that are shaping this space?
I think we'll continue to see the integration of ESG factors into mainstream investing. It will become less of a niche and more of the norm. We'll also see more sophisticated tools and metrics for measuring impact, and hopefully greater transparency and standardization in ESG reporting.
So it'll be easier for investors to make informed decisions and track the real-world impact of their investments.
Absolutely. And technology will play a huge role in this. We're already seeing the use of AI and big data to analyze ESG data and identify investment opportunities, and blockchain technology could be used to create more transparent and secure supply chains.
Wow. That's fascinating. It sounds like sustainable investing is not just about changing how we invest, it's about changing the world.
Exactly. And it's not just about the big institutions or Wall Street, it's about every individual investor making conscious choices with their money.
I love that. It gives me hope that we can create a better future, not just for ourselves, but for the planet and future generations. But let's shift gears for a moment and talk about the companies themselves. What role does corporate responsibility play in all of this?
It's inspiring to think that our investments can actually be a force for good, in the world. But I have to admit, I'm still kind of wrestling with this question of how we actually measure the impact of all these efforts. It feels a bit like trying to capture lightning in a bottle, How do we quantify something as complex as a company's contribution to, like, a healthier planet or a more just society?
Yeah, that's a challenge that the whole sustainable investing world is grappling with. I mean, we've gotten pretty good at measuring financial returns, but putting numbers on social and environmental impact, it's still very much an evolving field. Yeah, it's not like we can just pull out a ruler and measure like how much good a company is doing. So
Yeah.
what are some of the approaches that are being used to kind of crack this nut, to figure out how successful sustainable investments really are?
Well, one really important shift is moving away from just measuring outputs and focusing more on outcomes. So, for example, instead of just looking at how much a company invests in renewable energy, we want to track the actual reduction in carbon emissions that result from those investments.
Okay, so it's about connecting the dots
Oh,
between the investment and the real world change it creates.
exactly. We need to ask those tough questions. Did this investment actually move the needle on the issues that we care about? Did it make a tangible difference in people's lives or the health of the planet?
I love that idea of moving the needle. It's about results, not just good intentions. What other tools are being developed to track progress in this space?
Another key area is the development of standardized impact reporting frameworks. You can kind of think of it like creating a common language for sustainability. So organizations like the Global Reporting Initiative and the Sustainability Accounting Standards Board, they're working to create guidelines for companies to report their ESG performance in a consistent and comparable way.
So it's kind of like kind of creating a universal translator for sustainability, making it easier for everyone to understand what companies are actually doing and how they're performing. That makes a lot of sense.
Yeah, it's all about transparency and accountability. Standardized reporting empowers investors to see beyond the marketing hype and make informed decisions based on real data.
And hopefully it encourages companies to step up their game too, knowing that they're being measured. And carrot, it's like healthy competition.
Yeah.
For a good cause.
Exactly. As these reporting standards become more widely adopted, I think we'll see a ripple effect across the entire market, pushing everyone toward greater transparency and accountability.
You know, it's easy to get overwhelmed by the complexity of all this. But hearing about these initiatives and the progress that's being made gives me a real sense of hope. It feels like we're actually building a new system, a better way of doing business. That benefits everyone, not just a select few.
I could agree more. We're at a really exciting moment. With awareness of sustainability growing, technology providing us with these new tools, and a new generation of investors demanding change.
Well, I'm definitely feeling energized and inspired after our deep dive today. But before we wrap up, I want to bring it back to our listeners, the everyday folks who are tuning in, to learn more about sustainable investing. What's like the one key takeaway you want them to walk away with?
If you take away just one thing from our conversation today, it's that sustainable investing. It's not some exclusive club for the wealthy or the elite. It's for everyone. Every single dollar we invest has the power to make a difference.
So even small changes to our investment choices can ripple outwards and contribute to a more sustainable world.
Absolutely. Every investment is a vote for the kind of future we want to see. By choosing to support companies that align with our values, we're not just maximizing returns, we're shaping the world we want to live in and the one we want to leave behind for future generations.
That's a powerful thought. It makes me realize that we all have a role to play in creating a more sustainable future. And it starts with being conscious about where we put our money.
Well, it's been a real pleasure exploring this topic with you today.
The pleasure was all mine. Thank you so much for sharing your expertise and insights with us. This has been an incredible deep dive into the world of sustainable investing, and I'm walking away feeling informed, inspired, and ready to take action.
And remember, listeners, this is just the beginning. Keep learning, stay curious, and invest with purpose.
And that's a wrap on another deep dive. We hope you enjoyed this exploration of sustainable investing. As much as we have, we'll be back next week with another deep dive into a topic you've been meaning to explore. Until then, happy investing. And remember, make those dollars count.